Let me ask you something. If home prices were really coming down, wouldn't we be seeing it clearly by now? We've had higher mortgage rates for quite a while. Inventory has grown quite a bit in most parts of the country and certainly in the Fort Wayne area, and buyers aren't bidding aggressively the way they were 2 to 3 to 4 years ago. So it makes sense that a lot of people are thinking, okay, this has to be the year prices finally fall. But once you step back from the noise and you focus on the numbers, the situation isn't as simple as it feels. Yes, the market has shifted. Yes, things have cooled from the frenzy we experienced a couple years ago, but cooling off and coming down are two very different things. So today, let's look at what the numbers are actually saying and what that means for you if you're buying or selling in 2026. And no drama or fear-based predictions, just data and perspective. Let's start with what the national data is actually telling us. The Federal Housing Finance Agency, or FHFA, releases a quarterly house price index that tracks home values across the country. In its most recent report from Q1 2026, prices are still up compared to the same time last year. The growth rate is much slower than what we saw during the pandemic surge, but it's still positive. That matters because when people talk about a housing correction or a crash, what they're usually imagining is broad national price declines across the board, and that's simply not what the data is showing. Now let's look at Zillow. Zillow's home value index also shows that US home values are slightly higher than they were a year ago, and again, we're talking about modest growth, not dramatic or overheated, but not negative territory either. Then we have Redfin's 2026 housing forecast. Redfin is projecting roughly 1% price growth nationally this year, and it's steady, it's measured, it lines up with what we're seeing in the other reports. That's a very different environment from 2021, and it's also very different from the collapse we saw in 2008. So when you step back and you look at the broader picture, the pattern is consistent. Growth is cool, things are more balanced, but prices are not falling nationally. Homes are still expensive, monthly payments are high because of mortgage rates, and first-time buyers, they're feeling really stretched right now. So emotionally, it feels like prices should be correcting, but here's what's actually happening instead. Higher mortgage rates, they've cooled demand, yes, but they also locked many homeowners into low rate mortgages from a few years ago, and that limited the number of people willing to sell because giving up 3% to a 6 or 7% rate is quite a big jump for people. So supply never surged the way some had expected it to go. In many markets, we're still dealing with relatively tight inventory, not extreme shortages like before, but not oversupply either. And when supply stays tight, even softer demand isn't always enough to push prices down significantly. That balance is what's holding prices steady. Buyers, they're more cautious. Sellers, they're more realistic, but neither side is desperate. And markets don't crash when both sides are relatively stable, and almost never happens. Looking ahead, most forecasts remain conservative, but pretty steady. So Redfin expects about a 1% growth nationally this year. Zillow anticipates modest appreciation as well. And the FHFA's data continues to show year-over-year gains. When several independent reports show the same trend, that adds a lot of credibility, but it also doesn't mean every city is experiencing the exact same conditions. There are pockets, definitely, especially in some oversupplied metro areas, not Fort Wayne, but the larger cities where prices have softened quite a bit. And we may see a little more of that in specific markets and maybe even in Fort Wayne. Local conditions can vary depending on inventory levels, job growth, buyer demand in that area, but nationally, the data does not support the idea of a broad housing downturn. What we're seeing is normalization. The market has shifted from rapid acceleration to a steadier pace, and it's actually a healthier long term. Nobody wants runaway home prices. So what does this mean for buyers? If you're waiting for a dramatic price drop in home prices, the data simply suggests that that might not come anytime soon. So don't wait on that. However, buyers today may have advantage that didn't exist just a couple years ago. Definitely less bidding competition, a lot more houses to choose from, and you have a way higher negotiating position than you did a few years ago. And those factors can sometimes create more opportunity than a small price decline ever would. In other words, you might not see lower prices, but you may see a lot better terms. And in many cases, that can have just as much impact on your overall investment. Now, what does this mean for sellers? Well, for sellers, this is no longer a name your price market. Pricing strategy, presentation, and preparation, they definitely matter more than ever. Buyers are comparing more carefully now, they have more options, and that means positioning is everything. But values, they're not collapsing. And in most markets, well-positioned homes are still selling at pretty stable levels. The sellers who win in this market are the ones who price realistically from the start and present their home in a way that stands out. If it's not compelling, it's not selling. So our home price is finally coming down in 2026. Naturally, the data says no. What we're seeing instead is stabilization. The rapid run-up we experienced a few years ago has definitely leveled off, but broad price declines just are not showing up in the national numbers. Like I said, what's happening across the country and what's happening in your neighborhood can be two very different things. Real estate is very local, and that's where the real story is. If you're wondering what this means for your home's value or your buying power, let's take a closer look at your specific neighborhood. You can reach out to schedule a one-on-one strategy call, and we'll build a plan that makes sense for you this year. If you found this breakdown helpful, make sure to like and subscribe so you don't miss future market updates and practical real estate insights.